You know what time it is. I got to start off with a smile. Yes, I'm feeling good. It's Tantalizing Tuesday, everybody. Hopefully, everybody had an awesome and wonderful day. Happy Tantalizing Tuesday, kings and queens. Always great to be with you on today. Always great to bring you some knowledge today. Hopefully, you had a great start of your day. Well, end of your day. Your day started great. Everything is great. You did some things. You saw some things. You made some money. You made some connections. You made yourself happy. All of the above, right? So it's Real Estate Tuesday, kings and queens. So I'm here to bring you some knowledge on some real estate. That's what I'm here to do today. So, you know, been doing a lot of different things today. That schedule, I've been trying to, follow it. Didn't go as planned as usual. Things didn't line up, but I'm not going to beat myself up about it because I did get some things accomplished. I did finish some tasks. So I'm not going to worry about it. So we are here to talk about real estate on today. In particular, Memphis real estate, but also nationwide real estate, right? So let's jump on right into it, right? Well, my name is Toria Howard. Let me introduce myself first. My name is Toria Howard. I'm originally from Detroit, Michigan. So what up, though, to all my Detroit people? I reside in Memphis, Tennessee, and I am a realtor here. I'm an aspiring real estate investor. I also do financial literacy and funding. So all of the above. So drop a one. It said as life. Yeah, definitely life be life. Drop a one in the comments if you're watching this live. Drop a two if you're new to my live, and drop a three if you're watching the replay. And I really appreciate it. So here we go. So here was what's going on in Memphis. Now, from the end of December up until now, things have ramped up a bit. Okay. So at first we were like 80 or 90 new homes on the market here in Memphis. Now it's 100, it's going back up. 147 new homes on the market this week. On the last 7 days, 147 new homes on the market. So people are still buying and selling regardless of the fact. Why not you? Why aren't you buying and selling? Why are you not participating in this wealth journey? So definitely tap in. So 128 homes were sold in the last 7 days and 57 are pending. So what that means, pending meaning that they're in the last phases, the last stages of the closing process. So they're just probably waiting to go to the closing table. So that's what that means. So people are still buying and selling in Memphis. Memphis is a 54% rental market. So if you want to be a buy and hold investor, this is the best place to do it. So let's move on. Let's talk about some interest rates. Interest rates have been, interest rates. So a lot of people are afraid to buy homes because of the interest rate. But the thing is, you have to remember is, are you investing 100% in somebody else's wealth versus 6% in your own? You do the math. So I always tell my clients, it doesn't matter if you have a 740 or 850, your credit score, your interest rate is still going to be the same in those ranges. So it's optimum to get your credit score up to a 760 though, just in case something happens in the process and it drops down, it won't change your buying power. So 740, so when you have an 850 to a 740, the interest rates, right? This is nationwide. So some lenders have great deals going on right now. So you're talking about banks that's giving 100% financing. That doesn't look, if you got 100% financing and paying for closing costs, you're not coming out of pocket with anything. So you can worry about the interest rate later. And if you have a lower credit score, you can always refinance later once you have a better credit score. So if you have an 850 to 740, this is nationwide, it's 6.4%. If you have a 739 to a 720, 6.5%. This is the interest rates to buy a home right now. If you have a 719 to a 700, it's 6.9%. If you have a 699 to a 680, it's 7.4. If you have a 669 to a 660, it's 7.8. As you see, the correlation is going down. So between the 740 and the 660, it's a whole 1%, which will make a huge difference in your payments on your mortgage in the long run. So if you have a 659 to 640, you have 6.89. And then if you are at a 639 to 620, you at a 7.88, because some first time home buyer programs, you can still purchase a home in the 620 area. So I wouldn't advise it. I would advise you right now is the best time to get your credit and your finances in order for the busy selling season. There's going to be a lot more homes come on the market. The interest rates are going to lower. So you're 6 months out until June. And the spring and summertime, where it's the best time to buy a home. But it's always the best time to buy a home. If you're ready now, you're ready now. But if you are thinking about buying your home in the next 6 months, this is the best time to get started. Look at your credit reports. Look what's on your credit reports. Look at your finances, look at your debt. Are your credit cards, but I know they say 20 to 30%. No, it has to be lower than that, because the thing is, the more debt that you're showing, the less house that it can say that you can afford. So you have to make sure that you get that interest, that debt down. So you want to get it between 6 to 7%, especially when you're 3 months out into buying your home, because they're going to look at those 3 months bank statements. Those credit card statements, to figure out what your debt to income ratio is. So if you don't know what debt to income ratio is, so that's your debt versus your income. So if you have a higher credit score, it's the inverse. So if you have a higher credit score, you can have more debt to your income. If you have a lower credit score, you have to have lower debt to your income. So it's best to get that credit score up and get your debt down too at the same time. Credit score up, debt down. That's what we're looking for. So I want to talk about, a lot of people come in to Memphis for the different attractions and different things. So I'm going to talk about the 12 best boutique hotels in Memphis. I have a client who's looking to buy hotels, so it sparked my interest to, you know, put some of those out there. If you're looking for a staycation, if you're looking to come to Memphis, you're looking to have, go to a place to take pictures like me, um, for some type of luxury. Here are some places that you can go. So you have Arrive Memphis, which is, off of Butler, nice boutique hotel, kind of not older, I don't want to say that, antique, decor. Central Station, Memphis, is over by the train station, so it's very nice in there. Nice decor. You have the Peabody, of course. Peabody, you're going to go see the ducks, and all of that. It'd be steps from Beale Street. That's the best place to be, because it's right there. River Inn of Harbor Town, a small little boutique hotel, really cute in there. Kind of home like feel. You have the Moxie Memphis Hotel. Something's fairly new. It's very chic, very hip. Thinking about, taking some, nice pictures in there. That'd be great. You have the Hugh Hotel. They also have a rooftop. So if you're into going to the rooftop, they have a rooftop. It's cold, but sometimes we have some good days in Memphis. You can go to the rooftop. You have Hotel Indigo. Now, it's really nice in there. The decor is superb. It's really pretty in there. So if you're looking for something really hip, something really cute, that's Indigo. You have Hotel Napoleon. They've really revamped the inside. It still look like an older building on the outside, but on the inside it's very modern, very chic. So it's very cute in there. The guest house at Graceland. That's not really downtown. It's in Whitehaven area, but it's really nice. If you want to have something at the guest house at Graceland, they have really nice facilities. Then you have James Lee House. If you want to, look for that Victorian village type of feel, that's nice. Okay, of course, you got the Big Cypress Lodge at the Bass Pro Shop. If you want that, outdoor woodsy type of situation going on, that's something that you go to. You got the Canopy Hilton, which is really nice. Very good for a staycation. If you want to, do something with your boo thing or something like that. It's real cute in there as well. So that's just some, if you visited Memphis or you want to do a staycation, those are some of the places that you want to go. So let's really get into it, right? So I'm gonna start with the homeowners first. So if you're a homeowner, and you have to think about it because this is an investment, right? This is the biggest investment that you're going to ever, well, not ever, but this is your first, and maybe your first or your largest investment that you're going to make, right? So here are 7 smart steps that every new homeowner should take because you have to take care of your investment because you could take that home, right? Use it as leverage, use it as income. Something goes wrong, you lose your God forbid, you lose your job or whatever, you could take your equity out of your home to help you pay your bills. So even though you're living in it and it's not a cash flowing asset, you can make it a cash flow asset by taking the equity out and then going and buying another home. But if it's not a cash flowing asset, it can still be an asset for you in a sense when times get rough. So don't over personalize. Okay. So insurance companies, they're very tricky. When you're a homeowner, they're very tricky. So they will not cover certain things if it's over specialized. So, or over personalized, all the upgrades, they're nice and everything. But a lot of times when you sell your home, it's not going to give it the upsell value or the appraisal value that you're looking for. So sometimes it's a waste of money. So just be mindful of that. Unless you're gonna, once you sell it or you don't ever plan on selling it, that's fine. You can customize it, but you have to remember if it's not your forever home, it's somewhere you're not gonna forever keep, then you should not over personalize where things, or you're gonna have to reconstruct it in order to sell it. So don't ignore important maintenance. These are the top things that you should be looking at every, I would say, every 6 months or every quarter. So your roof, your HVAC, unless it's brand new, electrical, plumbing, foundation. Those are the 5 major things that can go wrong that are very costly to your pocket. So you need to make sure that you are putting together savings on know how much a new roof is going to cost on your house. You just never know. Something can happen. Sometimes insurance act like they don't want to pay, all of that different stuff. You don't want to go through that. So make sure that you're saving. So you'll take however much your roof costs and, divide it by the time length that it takes for it to, deteriorate. And that's what you will, pay. Because the roof usually used to be 30 years. I guess, these shingles are not like they used to. So now it's more or less 15 years. So you would just take the cost divided by 15, and that's what you would pay. That's what you would save every month. For that HVAC systems, usually at around the same time, they say 7 to 15 years depending on the unit. So it's the same thing. Electrical, plumbing, just make sure that you're being mindful of that. Hire qualified contractors. Anybody that's doing anything in your home, make sure they are certified. Get some recommendations. Let's see their work. I know sometimes we want to be cheap and we want to, get, the cheapest, person. But sometimes it's not. And I'm not saying spending a whole lot of money, they give high quality either. Let them see, let them show you their work. Get a couple of customer, like ask them some customer referrals or reviews or whatever. Talk to some of their ex-customers to see what their experience was like, because it's about customer experience too, and also the quality of work. So get help with your tax return. Owning a home has so many tax advantages. Those of you that like those big refund checks, you want to add to your refund check, buy a house because you get money back on the interest that you have paid. Yes, you get a refund. You get an added refund to your taxes with the deductions because of the interest that you've paid. You know how I know? Because I bought a home, and every time I went to file my taxes, that was put on there. The interest, those deductions, those will help you get more money from your tax returns, and it's a lot of tax advantages for buying a home. Besides just that, Keep receipts for home improvements, because anytime you want to sell your home and you don't have, you've done upgrades and things like that, those receipts will help you to show if you get a low appraisal, the appraiser, hey, look, this is what I got done. This is what it's supposed to be worth. So that'll be something to do. And then repairs versus improvements. Are something that you have to get done in order for the home to function. Improvements if you just want it to look better, right? So if you buy a foreclosure and some things that are broken in there, then you have to make some repairs. But you also might have to make some improvements to make it, look the aesthetic look that you want, or whatever the case may be. But there's tax advantages to that as well. So definitely tap into that and get properly insured. Some people don't realize that a homeowner's insurance and home warranties are two different things. Homeowner's insurance protects the dwelling. And a lot of these lovely insurance companies don't like to pay. So you need to make sure that you're understanding your coverages, what will be covered, how many claims you can have within a certain time period. Because if you have too many claims, they'll drop you. And sometimes it's one claim. If you have two claims or three, they will drop you. So you need to know all of these specifics so that you will know the right insurance company to go with. A home warranty protects the things in the home, the appliances, the different functions in the home. So you definitely need a home warranty, for your stove, your dishwasher, anything that has to do with anything internal to make the house function. That's the home warranty. Because regular homeowners insurance does not cover like the HVAC, refrigerator going out, this and that, or whatever. So make sure that you understand that. But bottom line, owning a home has so many advantages. It's a generational asset, something that you can pass down. You can give to, your family, your friends, or whatever, however you want to split it up. You don't have any children, whatever. But that is something you can do. So let's go to the first time home buyers, those of you that are thinking. So here are 9 steps to take if you're planning to buy a home within the next 6 months. So like I said, this is the best time to purchase your home, or get ready to purchase your home in these next 6 months. So know your budget. Before you browse through listings and do all of that, know what you can afford. Ask someone, a trusted person, a trusted lender, or somebody, and they can give you a guesstimation on, basically what you would probably be based on your income and what you tell them. They probably can give you a little guesstimation, but they're not going to know for sure until you issue your information. But also know what you can afford. If you're paying $800 a month and that's all that you can afford, then that's what you can afford. If you know you can afford $1,500 and that $800 is a breeze, then $1,500 is your cap. So make sure that you are knowing what you can afford when you're talking about your mortgage. Check your credit reports. I say that all the time. Check your credit reports, check your credit reports, check your credit reports. You have to have a thick file. What that means is you need to make sure that you have the proper credit lines on your account. What banks are showing up? Because a lot of these subprime lenders, these mortgage lenders are not accepting. If you have a whole lot of authorized users, excuse me, they're not accepting a whole lot of authorized users, especially if you're a particular age. Now, if you're younger, like 25 and younger, that's different. But when you're talking about 30 and up, they're not accepting a whole lot of authorized users because it looks like you don't know how to manage your own money and you can't get anything in your name. So why would they give you a mortgage? So make sure that you have banks like, Chase and the Bank of Americas and the Wells Fargo's, those big banks, because they have more stringent restrictions. So that'll help you see like, oh, if you can get approved there, you can get approved anywhere. And credit unions as well. They like to see the credit unions on there. So when you're thinking about building your credit, think about getting products from the banks that you already have relationships with. Get a secure card and ask when they turn into an unsecured credit card. So a secure card is when you put money on it. Stop going to all these other different people, that don't have the banking power to get these get your get the credit lines that you need. They're not looking for those subprime lenders. Get it from those big banks or your credit unions, because that's what the lenders are looking for. So make sure that you maximize that. I did a video before about how to pay down your debt. I'm gonna do a little bit of something about that in a second. So figure out what your down payment should be. Even though there are first-time homebuyer programs, you will still have to show 3 months of your mortgage in your savings. Now, after you close on your home, you can do whatever you want to with it, because it's banks that are also giving back money at the closing table. So you'll have a little bit more money to spend. So make sure in this 6 months that you're saving. So if you know that you can afford $1,200 a month, then that means by the time you're ready in June, you should have how much? What's 12 times 3? Anybody? Somebody? Do some math. 12 times 3. So $3,600 is what you would need. No? Don't play with me. I'm like, say, wait. So $3,600 is what you would need to save. If you know you can afford $1,200, $3,600 is what you would need saved, in your bank account, showing these lenders that you know how to save your money, you know how to manage your money, even though they're giving you money. But even though they're giving you money, you have to still have money saved. And then you still have to pay earnest money, closing costs sometimes, and also for your appraisal. So you're going to have some money anyway. So make sure that you save that money. But there are programs that pay for everything, but the only way that you can get everything, you have to show that you have some money saved. So definitely do that. Avoid any major purchases. Not a whole lot of not a whole lot of inquiries and different things like that. Okay, because you only should have 2 inquiries every 2 years. Okay, so make sure that you're not co-signing for anybody. Make sure that listen, I know some people, they need you, right? They want to make their situation your emergency, but at this point you have to tell them no. You can't do it right now because you're preparing to purchase a home. So make sure that you understand that you just have to say no for right now. And then listen, once you get in your home, co-sign, find as many bit more people that you want, buy that car, buy whatever it is that you want, but just be disciplined for these next 6 months. And don't run up your credit cards. So shop around, go to open houses, see what's out there. They have open houses every weekend. Go out there and see what's going on. And then also start talking to lenders and building a relationship with lenders right now. See, who do you want to work with? Because that is the person that's going to help you close your loan. So you need to have a relationship with that person to make sure that they are with you, for you, and by you to get to that closing table. So before you see homes, get a pre-approval letter. So once you know that you're ready, that you have that thick file, you have that 700 credit score, you have saved your money, and you have you know uh, your debt, you have paid down your debt, you're ready. And then another thing that you can do, if you find a house that you like, and it's on the market, once you get closer to that point, you can, let's say, court the seller, right? You build a relationship with the seller, because people like to sell to people they like, know, and trust too, not just buy things. So also court the seller. So those are just some things to do right now in this 6-month period to get prepared to purchase a home in the next 6 months. So I'm going to talk about, my last thing is how you have these interest bearing accounts, right? You have credit cards, you have, um, maybe loans, and you have your car note, all interest bearing accounts, right? And you're trying to figure out, how do I pay this faster, right? So, do you know what your reporting date is versus your due date? Those are two different things. So you have to know what your reporting date is. What that is that statement date. So the day after your statement is the day that the creditors report to the credit bureaus. So you need to know that date. So you need to be making your payments and paying your balances off in full before that date. Well, 2 days before that date, the closing date of your statement. So, for example, if your closing date or your statement date is from excuse me, January 1st to February 1st, and your due date, excuse me, and your due date is February 8th, most likely your reporting date is February 2nd. So you need to find out when do they report to the credit reporting agencies so that you'll know to pay your balance off in full. That will help you boost your credit score. Also, on those interbearing accounts like credit cards, car loans, and personal loans, find out what your amortization schedule is. What is the amortization schedule, you might ask? Well, let me tell you. That is how much you are paying in interest each, however they are calculating it. Sometimes it's compounded daily. You know, it's very rare that it's compounded weekly. Most likely it's compounded daily. So you find out what your interest payments are daily. And that is the amounts you pay every week, if you can, or pay it every 2 weeks. So basically, you are making two full price payments when, it looks like you're paying two full price payments, but you're only paying one. So that's how you can beat that. Find out what your interest payments are daily so that you are making sure you're beating down that interest faster. And if you can pay it weekly, pay it weekly. If you can pay, you get paid every 2 weeks, pay it every 2 weeks. And hopefully you're paying more than the minimum payment. If you want to wait to the due date, that's fine, but you're not going to see your credit score move the way you need it to move. So you need to make sure that you know your reporting date, which is the statement date. Your statement date, which is on your credit card statement, and what day does your creditor actually report to the credit reporting agencies, the TransUnion, Experian, the Equifax. Find out what your interest rate compounded daily rate is, so that you'll know how much you need to pay, because the money that they say your minimum payment has nothing. It's all it is paying a little bit of interest. That's it. That's why you're not seeing your score move. That's why you're not seeing your balance move. So definitely find out what is your interest payments compounded daily. And if you have a personal loan, what's your amortization schedule? When is everything being processed? So that is a way that, and if you do this trick, because everything is based off of algorithm, just like social media, everything is based off of algorithm. So theirs is the compounded daily algorithm of the interest rate. So definitely find out what that is. Pay attention to your credit card statements and see when does your statement open and when does your statement close. That's when you should have your balance paid off, during that period. And then ask your creditor, when do they report to the credit reporting agencies? TransUnion, Experian, Equifax. They can tell you. So those are some little tidbits. And then once you get your mortgage, you can do the same thing with your mortgage. Find out what your amortization schedule is and make those payments accordingly. And you will be able to slice that mortgage in half, or maybe even more than half. So just wanted to give you a little insight today. So it all depends. Like if they don't let you pay partial mortgage payments, sometimes they don't let you pay partial. Well, sometimes they don't make you pay partial mortgage payments because they know that you won't pay down the interest. But find out if you can pay it partial, you might be able to pay it before the due date, like before the first. You might be able to pay something and then pay it again on the first. But still, all in all, find out what your amortization schedule is and then make that payment accordingly. Now, you can make a full price payment multiple times a month. So, for example, if your mortgage is $1,200 and you see that your amortization schedule says that the next interest payment is $300, then add $300 to that payment. That's still beating down the interest if you can. But you want to pay more than what they're telling you to pay is the point, in a sense. If you can't make partial payments, but you need to make sure that you know the exact number, so you're not getting to a point where you can't afford it. And then save it. If you know you can save it, if you pay your mortgage in a lump sum and you know you can save some, to pay a little bit extra, then save it and then make that payment then. But you need to know what your amortization schedule is, which is the interest payment, to see how much you're paying in interest. That, is it compound daily, monthly, however it is, that's how much that you need to pay on your mortgage in order to pay it off faster. I hope that answered your question. Because the whole point is to pay more on, to beat the interest so it goes more to your principal. That's the point. So knowing that amortization schedule, because they should have given it to you in your package of your mortgage. They should have given it to you in the package of your mortgage, what your amortization schedule is. But if not, you can always ask. So thank you so much. You're welcome. So, you, and then if you know that you can't pay partial payments, like I said, I know they stopped doing that before, because I know you could before. I know, because I had my mortgage through Bank of America at one point, and I was able to do that as long as it was before the 15th. Yeah, before the 15th, or was it? No, it was late on the 15th. I had to do it before the first. That's what I can make I can make a partial payment before the first, and then I can make the rest on the first. After that, I couldn't make a partial payment. So it might be that you can't make a partial payment too. Like, it has to be before the due date. So maybe check that out. Maybe. I don't know. But yeah, now it all depends on how they're set up. But I bid you adieu, everybody. I'm about to eat some scrumptious food before I do my stretches and go to bed. So I'll see you tomorrow for Winning Wednesday. Hopefully I come on, but I'm going to do something. I'm going to do something. I'm going to get on, do something. As I said, I'm still going to go back to going live every single day, for at least 5 days a week. So, I don't know. Do people like me? No, I don't care. I do this so that I can get the education out there. Hopefully, you thought this was some great information. Maybe you'll, share it with somebody. Let me know if this is some great information. Put some fire in the chat. And I should in the chat in the comments. Put some fire. Let me know something. Let me know if this was some good information. So my name is Toria Howard. I am in Memphis. I'm a realtor here. If you need any of my services, I would love to help. I love you back. So, if you need any of my services, even if you're not in Memphis, I can still help you with your plan for home ownership. If you don't have a home already, so I can help you. And I know a lot of realtors all across the United States. So just talked to one in California today, and one in Texas today, matter of fact. So everywhere. I know I'm in Florida. I know I'm in New York. I know I'm from everywhere. So y'all have a blessed day, blessed night. Bye.